When you take a look at the outlook, I'm more curious about the second half of the year, mind you. Is there an expectation that some of the factors supporting the IPO market, like easy monetary conditions, like super low interest rates and liquidity availability, are those the factors that are going to change?
Thank you. I think so far, we have seen, the market has really defied the expectation, and as we have just heard, it looks like the low interest rate is going to stay around for a while. And given the momentum, we expect, a very strong first half of the year. But second half of the year, there are uncertainties. How effective the vaccine is really going to, help, to limit, the further, spreading of the pandemic, and whether the real economy can really recover. And given, last year, as we have seen, a lot of the new economy technology company have made very, very significant gains in terms of their share price. And, the investors, can be a little bit uneasy when they see there's any nervousness in the market. And then these are the stocks that they may be prepared to actually lock in the profit. And so there could be market corrections and also volatility going to the second half of the year.
What about sector-wise? Do you expect it to be another banner year for tech? Because that was really, particularly going into the last few months of last year, was really where the fast and furious IPO action was.
Yes, I think the issue here is that people are probably more prepared, for a longer period of to co-live with the pandemic, and therefore, people are getting used to online shopping, food delivery, and therefore we are seeing, more of these technology companies and also, e-commerce, to continue to receive, very popular support by the investor. But that said, in certain markets, for example, in ASEAN, in Indonesia, we are expecting to see, obviously, companies, for example, in the commodity sector, and also privatization of some of the state-owned enterprises in certain markets as well.
So, Paul, how much of the investment was speculative given the post-IPO returns that we saw last year?
This actually worries me a little bit to see, very strong first-day return. I think there are about over 150 IPOs which doubled their price on the first day of trading just from Asia, compared to just about 60 plus for the rest of the world. I think so there is a certain element of speculation. People are taking advantage of the low borrowing costs, and that's why we are seeing very spectacular first-day return recently, in the last month of last year, and also what we are seeing in January as well. So there are a lot more retail investors going into the market as well, being attracted by these very strong IPO listing investment return in this low interest rate environment.
So you mentioned in your notes that Hong Kong and NASDAQ dominated the IPO market in the last quarter of 2020. Will this also be the case going forward, especially at a time when we continue to see some more regulatory challenges, whether it's in China with their own domestic fintech industry or here in the US against some Chinese companies?
Despite the China-US tension, we have seen actually, US remains the most popular inbound stock exchange for overseas companies to be listed. There are over 60 overseas companies listed in the US, and over half of them actually came from China in 2020. We expect the trend to continue for now, and whether that will change will depend on the new US administration. And we are also seeing some proposed listing rules changes in different markets. For example, the Hong Kong Stock Exchange, and also some of these new listing requirements just been rolled out, by the SEC. And also we are seeing London is also proposing for some listing rules changes to allow for dual class shares listing to be more competitive with some of the other European stock exchanges.